And if you look at the pages that I gave you, bless you, I've already posted some items so that we can speed up the process of working through this problem. Coming into focus. Okay, so there's the worksheet that we're going to be using, and we're going to be recording those in the journal. So if you'll find your page 3 of the journal, it should be the first page in that packet of papers that I gave you. Let's look at the A adjustment, and our debit is office supplies expense, and our credit is office supplies. Let's put our date, and it's for the month of January, so it's the last day of that accounting cycle, January 31st, and then put the year in. On your first line, if you'll write the title, adjusting entries. And let's put the A. We don't need to label it A because it's the first one that we're recording in the journal. Let's skip a line, and then let's look at the B on that worksheet. The debit for the B was rent expense, and the credit was prepaid rent. Skip a line, and then let's write the second one. Again, we don't have to label it A, B, C, or D. It should be the second one. My page is just labeled B.
They all get the 31st of the date?
The 31st, the last day of the month. Should be the last day of the month. If it doesn't tell you what the day is, you might have to use the knuckle test to say how many days are in that month. So our debit for the second one is rent expense, and the credit is prepaid rent. Now this is why it's so important when you're writing those adjustments on the worksheet that you use the correct name for the accounts. Where do you get the correct name? Either from the ledger or the chart of accounts. Most problems will give you a chart of accounts, some don't, and you can just look at the ledger. That's our B adjustment. On this one we just had 4. Our C adjustment, and again this is the worksheet on page 183. Our debit was depreciation expense office equipment, and our C is accumulated depreciation office equipment. Skip a line, and then there's your C.
Even in my absence.
And then we had one more, and that was our D. And the debit for the D is salaries expense, and our credit is going to be salaries payable. And there's our D. Yours should look like this, with all of them written in alphabetic order, A, B, C, D, and we haven't posted yet. Our next step is going to be to post to those 8 accounts. You have the ledger pages. The first one is going to be office supplies expense. So find your office supplies expense in your packet. And you can see I already have balances in those accounts. Office supplies expense didn't have a balance, so we're going to record December 31st. January, is it January? January 31st. Post reference column, what's going in there? GJ2, it was page 2. And then record whether it was a debit or a credit, and then carry your new balance over. The last step is going to bring the account number for office supplies expense, which is 514, back over to the journal. So yours is going to have the 514 right there. Let's post the rest of those. It will take you a few minutes to do that. And then we'll check your numbers. It'll take you a few minutes to post. when you finish with your posting, you should have the account numbers there. You have to make sure you post, or your post-closing trial balance won't come out at the very end. I gave you beginning balances because I posted all of the journal entries. I didn't want us to spend time posting just the transactions that occurred during the month. So those numbers just didn't come from out of the blue. They actually came from after we finished posting. I just wanted us to be able to speed up the process to work through the problem. So you should have posted to 8 accounts. Did any of those already have a balance? Accumulated depreciation should have had a balance, did it? And probably your prepaid rent and your office supplies, possibly your salaries payable. All right, that ends our process of recording in the journal the adjusting entries and posting the adjusting entries. Nothing yet. The question was, have we used income summary yet? And we haven't. We won't use that until we do the next set of transactions. So let's go back to the PowerPoint and we'll talk about journalizing and posting the closing entries. Think about the expanded accounting equation that we did in chapter 1, I guess. The assets equal the liabilities plus the capital minus the withdrawals plus the revenue minus the expenses. Our permanent accounts are the ones that are on the balance sheet, the assets, the liabilities, the owner's equity, or the capital accounts. They're called permanent accounts and they'll stay with us forever. They'll go from one accounting period to the next until that business has dissolved. The withdrawals, the revenue, and the expenses are the accounts that are called temporary accounts. Now, the revenue and expenses are on the income statement. The withdrawal is not on the income statement, but we use that withdrawal account on the statement of owner's equity. We subtracted it from the capital, and we're going to close that account as well as the ones that are on the income statement so that our owner's capital account will be current. So we're going to close revenue, expenses, and the withdrawal account. They're called temporary accounts. Their balances are not carried over from one accounting cycle to the next or one accounting period to the next. We're going to reset them to 0, either at the end of the accounting cycle, the end of the month, the end of the year, whichever accounting cycle we're using. And that gives us the opportunity to compare either this month's expenses with last month's and next month's expenses. It lets us keep track of what the new capital is for the owners of the business because we've subtracted the withdrawal. We're also going to have the net income and the net loss, just like we did on the statement of owner's equity. And it allows us to have the new data for the next accounting period. There are 4 steps in making the closing entries. The first one is to close the revenue account. The second one is to close the expense accounts. The third one is to close the withdrawal account. Well, the third one is to close the new account we have, income summary, that we haven't really talked about yet. And the fourth one is to close the withdrawal account. The income summary, brand new account in Chapter 5, it does not have a normal balance. We're going to put all the revenue in there, all the expenses, and what's left is going to be net income or net loss. With step 3, when we close income summary, we're going to close income summary into the capital account. The first two, we're going to close into the new account called income summary. The difference between what we've posted from step 1 and step 2 into income summary should equal our net income or net loss. If it doesn't, we might need to go back and check. When we close income summary, since it does not have a normal balance, we can either close it with a credit or with a debit. We won't know until we post these two. When we close the withdrawal account, it has a normal balance on what side? On the debit. How would we bring the withdrawal to a zero? With a credit. How are we going to bring the revenue account to a zero? Its normal balance is where? On the credit side. How will we bring it to a zero? With the debit. Our expenses have a normal balance on what side? On the debit side. How will we bring those to a zero? With the credit. So let's go back and look at the worksheet on page 183. Let me see if I can switch that back to looking at the worksheet. Maybe. Here it is. So let's just look at the income statement. And you can see that in your book too. It's on page 183. The revenue is there. It should be on the credit side. The income statement. The expenses are there, and they should be on the debit side. We want to bring all of those accounts to a zero. Then we're going to bring income summary to a zero. And then we're going to bring the withdrawals to a zero. Right? All of those numbers are on the income statement. Let's finish working through the PowerPoint, and then we'll go back and look at the entries. I think there's just a few more slides. Here's just an illustration. If some of you are visual learners, you might want to just look at that, what we did with the income summary. We're going to put the revenue in, the expenses in. I think it's like just a bushel basket that you're putting those two things in. What's going to be left is going to be the net income or the net loss. We're closing the revenue and expenses to that new account income summary, and we're closing income summary into the capital account. Now, if we're closing income summary, and we're closing income summary to the capital account, this one doesn't have a normal balance. Can you just direct it over there a little bit? Okay, thank you. Capital does have a normal balance on the credit side. Income summary does not. When we're closing the income summary, if income summary has a credit balance, we'll need to close it with a debit. If income summary has a debit balance, we'll have to close it with a credit. If we're closing income summary into capital and we close it on the credit side to capital, did we have a net income or a net loss? We're closing income summary into capital. Okay, so we have this one will be our debit, one will be our credit. Let's say income summary has a credit balance. So we need to close it with a debit to income summary and a credit to capital. That's how I worded on the test. Will that be a net income or a net loss? What did we do to capital with that closure? It went up. So did we have a net income or a net loss? A net income. If we're closing it the opposite way, remember income summary does not have a normal balance. So if we're closing, let's say income summary had a debit balance after we posted the revenue and the expenses into it. We have to close it with a credit and a debit to the capital account. Is that a net income or a net loss? A net loss. Now on the test, you might have to draw out that T account so you know what you did to capital. I'm not going to give you the T account and say, was that a net income or a net loss? I'm going to say, if you had to close income summary with a credit to income summary, you'll have to know that it was the debit to capital, and that would be a net loss. So that's how I'm going to word the question on the test. We'll do a few of them, and it will make a little bit more sense after we actually post these closing entries so you can see what's happening in the ledger. Right now you don't know what's happening to the ledger. Where's the normal balance for income summary? Doesn't have one. That's a question on the test. Alright, let's look at the next slide. This is, I don't know whether this is the same worksheet that I pulled out of the book or not. It might not be. But we're taking all of the information from the income statement to make the closing. We're closing revenue, we're closing expenses, we're closing income summary, we're closing withdrawal. 4 closures. To zero the revenue balance, the income statement section of the worksheet shows that the word processing fees has a credit balance of $8,000. How do we bring that revenue account to a zero? With a debit. We want to bring it to a zero. And we're closing those first 2 to income summary. So here's our debit, or processing fees, and our credit is income summary. What is our balance now for the revenue account after we post? 0. What is our balance in income summary? On the credit side. All right. Let's look at the next one. All right. Clear to 0 the individual expense accounts. You don't have this number, the income summary debit, until we list all of the expenses. On the worksheet on page 183, how many expenses do we have? Did we have 5? 1, 2, 3, 4, 5. There's 6 on this example, so it wasn't the same worksheet. We need to take all of the expenses. We're bringing them to a 0. They had a debit balance. To bring it to a 0, it's a credit to all of those expenses. Our debit we've left blank because we have to add those up to see what the debit amount is going to be in income summary. $3,100. Can we check this number somewhere? We can check it on the worksheet, can't we? We can see it there because your expenses were totaled on the worksheet, on the income statement. When we post that closing entry, what happens to our accounts? What's the balance in office salaries expense? You'd have to add these three up. But it should equal the 1,650. So what's the balance in this? 0. Balance in this one? 0. Balance in this one? 0. Balance in income summary? How are we going to know what the balance is? What do we have to do? We're going to have to foot this one. We're going to have to subtract the 3,100 from the 8,000. We'll have to foot this one. Advertising expense, we brought it to a 0. Office supplies expense, we brought it to a 0. And depreciation expense, we brought it to a 0. This is really the only one that we may have to foot. We'll have to subtract the small number from the large number. This one you might have to foot too, but if you were posting it to the real ledger and not the T accounts, you'd already have a balance there. All right, we're back to the T accounts, which you have to foot those. All right, now here's the closure for income summary. Remember, the first closing was for revenue. The second one was for expenses. The third one is to close income summary. Here we've footed the income summary. We have a credit balance of $4,900 in income summary. How do we bring that to a 0? With a debit. Okay, a debit to income summary and a credit to, what are we closing the income summary to? To the capital. You've already been doing that on the statement of owner's equity. We just haven't recorded it in the journal and we haven't posted it. So capital was not current in the ledger. This will make it current. That's why we have to do the closing entries. So we have a debit to income summary to bring it to a 0, a credit to capital. Was this a net income or net loss? A net income. Because what did we do to capital with that credit? We made it go up. Okay. Now we have one more closing entry to do. Does anybody remember what it is? Starts with a W. The withdrawal. All right. Well, here they're giving us another example of how we close that. The income summary has a 0. And then here's our last to close the withdrawals. What was our balance in the withdrawal account? $625 on the debit side. How do we bring that to a 0? With a debit or a credit, with a credit. And what will we debit? The capital account. So here's our B. Clark capital for $625. Here's our B. Clark withdrawal. When we post it, this is going to be 0. And we post it to the capital. Capital is going to be higher or lower? Lower. Right? So we have 4 closing entries. If you want to write those down so you remember them, it will help you with doing the homework. The first one is to close revenue. The second one is to close expenses. The third one is to close income summary. And the fourth one is to close withdrawals. All right? I don't have a mnemonic for that. It's R-E-I-W. If that helps. All right, R-E-I-W. Revenue, expenses, income summary, and then the withdrawals. Are we closing capital? But we're adjusting capital, aren't we? We're adding the net income to it. We're subtracting the withdrawal. Where have you already done that? On the statement of owner's equity. We did it on paper, but we did not recorded in the journal so that we could make that account current in the ledger. It wasn't current. It still had the beginning capital. We said that the ending capital on the statement of owner's equity was the beginning capital for the new accounting cycle, but we didn't make it current. This makes it current. This is why we have to do the closing entries. Would we do these every month? I think it would depend on the size of your company. You might, if you wanted to be able to compare month to month. If it's a smaller company, you might just do it at the end of the year. It's a lot of work to close all of those. This company only had 5 expenses, but we do want to have our capital current. We want to know what's in that capital account, and it's not current with just using the statement of owner's equity. Are we back to the board? Okay, thank you. All right, here's what they look like in the journal, and they usually come right after the adjusting entries. Just skip a line and then put the heading. Oh, and they don't have the heading. There should be a heading that says closing entries, just like we did with the adjusting entries. So you don't have to write a description after each one of these. So here's the first one, closing the revenue. The second one, closing the expenses. My suggestion is that you post these 2 first. After you record them, post them. It will help you to determine whether we close income summary with a debit or a credit. Whatever the balance is in income summary, we have to do the opposite to close it. Income summary doesn't have a normal balance, so this can go on the debit side or the credit side. Either one, depending on whether our revenue was greater than our expenses or our expenses were greater than the revenue. The last one, and then you can post this one so that you're sure that you close the income summary. Did we have a net income or net loss by looking at this transaction? A net income, because capital has a normal balance on the credit side, and it went up with this transaction. The last one we're closing is the withdrawal account. Capital is going to go down. Withdrawal is going to go to a 0. Have we posted these yet?
Yes.
We have, okay, because the account number is on there. The last thing we're going to do then is to prepare a post-closing trial balance. First time we've done this, we're going to go to the ledger and just pull out the accounts that have a balance left. Post means after we've closed. What accounts should we have left when we prepare the post-closing trial balance? Assets, capital, and our liabilities. We shouldn't have a withdrawal, we shouldn't have income summary, we should not have any expenses or revenue. That's all we should have left. I don't know that they give us a picture of one, but there's one in the book that we'll look at. It's the last step in the accounting cycle. It only has the permanent accounts. It aids in checking whether the ledger is still in balance, and it's the same procedure for the trial balance. It has a specific date, the name of the company, post-closing trial balance, and then a specific date. Oh, they did give us one. This is all that's left. Everything else has a 0 balance. That's why I've already posted some numbers into the ledger account that we're going to use today. Lots of information at the back of the chapter on the summary. I would go back and read those, but I think it will be clearer once we record the closing entries. So let's use that same worksheet that's on page 183. What is the balance for the revenue account on page 183? It's 500 on the debit or the credit side? On the credit. So how do we close that revenue account with a debit, right? Write your heading closing entries, and I don't have the adjusting entries on there, but I came down several lines. Just skip a line, put your heading. We don't need to write the month again, just the 31st. It's a continuation. Should still be on page 2. Fees earned, and then a credit to income summary. That's our first one. You might write an explanation there just off to the side, not on the line, to say that this closing entry is to close the revenue. Where did the number come from? From the income statement on the worksheet. You could just write it over here on the side, just as a reminder for you, so that you know where that number came from.
I mean, all of it, the closing entries.
It should just go right under the adjustments. You should have enough room.
Okay, adjustment.
If you go to page 3, I think I even gave you an extra page, didn't I? If you want to put the closing entries on a separate page, that's fine too. And then it would just be coming from page 3. Did I label that one correctly as page 3? The
This
next
is page
does it say, what's it say, page 1? Change that second page to page 3. I think I forgot to change it to page 2 when I did the demo last time, so I wrote it in. But you might just make a notation to yourself that this number came from the income statement on the worksheet, and we're closing the revenue. What is the next closing entry that we need to do? It's all of our expenses. Our expenses have a normal balance on the debit side, so we're closing them with a credit. And our debit is going to be income summary. I wrote income summary in as the debit, but I don't know what that number is yet. And I listed salaries expense, advertising expense, office supplies expense, rent expense, and depreciation expense, office equipment. Add those up, and then let's see what number you have for the income summary.
And this still just goes under the.
Just skip a line. Skip a line after that first one where you close the revenue. When you add up the expenses, what's your debit for income summary? Okay, $334. From here, I want you to post those two closing entries. So let's post the first one, income summary and the revenue, and then let's post a revenue and income summary, then let's post the second one, income summary and all of the expenses. Let's post, and the last step is to bring the account number back to the journal. Now you already have balances in some of those accounts. As you're posting the revenue, it should bring it to a 0. Does it? Here's the first one after we posted. What happened to your revenue when you posted that $500? To indicate that it's a zero, in accounting we don't usually write a zero, but to put two horizontal lines in the total column. One in the debit side, one in the credit side on the balance. Let's see if I have a picture of it. In accounting, if we leave anything blank, or if we just have a zero, someone might think that you've left something out. Here's just an example of what it should look like when it's a closing entry and it brings it to a zero, line, and line. Not a zero, just a line to indicate that it is closed, it does not have a balance. If you just left a zero, someone might think that you left something off, especially an auditor coming in to look at that. So when it closes, just put your horizontal line in the debit and the credit column. Once you're finished with posting the revenue closing entry, then let's post the closing entry for all of the expenses. And I've already posted mine, so I have the account numbers there. Are the accounts going to a zero? Posting is the one job that you have that takes a lot of time. Is it working out so that there's zeros? over from another accounting cycle. And that's why I wrote the word balance, and I only put it on the balance side. I didn't put it like it was a transaction in the ledger. I just put it as balance. I should have put a check mark in the post-reference column, did I? Did I leave that off?
Yeah.
Okay, because it's just a number that I gave you. I didn't actually post all of the transactions. I just gave you a beginning balance. Your balance for fees earned, once you post that, should be 0. You indicate with the 2 horizontal lines. Your balance for salaries expense, advertising expense, office supplies expense, rent expense, depreciation expense, office equipment should all be zeros. You'll indicate a 0 with the 2 horizontal lines in the balance column. And then you should have a balance in income summary. Is that what it is? Now the posting can only be as accurate as the balance that I put in there and the posting that you're putting in there to bring them to a 0. Were mine correct? Did it come to a 0? Sharon, are you finished with yours? Did it come to a 0 on all of those? We'd be here forever and a day if you had all of those transactions to post from the journal entries to get to that balance. And I just don't want you to keep practicing the posting because you should already know how to do that. Right, you need to add your 50 and 60 together. Remember on the ledger that you have a debit and a credit column, and then you have 2 balance totals. And when you're calculating, let's just look at this example, the salaries expense on this problem. It's not the same one that you're working on, but we had a debit balance. We posted a debit on the 31st as the adjusting entry, and our new balance should be those 2 added together. Now this is the first time that we'll be writing something in the explanation column, The balance I already have written in there. If you're recording the adjusting entry, it should say adjusting or ADJ. And then the closing entry should be labeled also as you're recording those. It's the first time that we've had to write something in that description. Does anybody still need time to post those first two closing entries? Let's go to the next closing entry. And what are we closing in the third one? Income summary. Go to your income summary account and tell me what the balance is for income summary. On which side?
Credit.
On the credit side. How do we bring income summary then to a zero?
Debit.
With a debit. And what are we closing income summary to? To the capital account. And this, even if we just looked at this, that we didn't have anything else to look at, we would know this was a net income because we have a credit to the capital. So we're closing the income summary, the balance is 166, and then close it to the capital account. Same number, 166. Let's post this transaction. Income summary should go to a zero, and the capital account should be increased. When you finish posting, those are the account numbers. Did income summary go to a zero? Hopefully. Okay. And capital should have been increased. Our fourth and our last closing entry is to close the withdrawal account. If you need to look in the ledger to see where the balance is for the withdrawal account, or look on the worksheet on page 183, the withdrawal has a normal balance on which side? How do we bring it to a zero then if it has a normal balance on the debit side? With a credit. And what are we closing the withdrawal to? To the capital account. A debit to our current capital, a credit to our current, withdrawal. Let's post those two. And when you post, those are the account numbers. Then this should be a check of all of the closing entries with the account numbers and with the heading. use any paper?
It's a thicker tan.
Is there still paper in the car? Sometimes it is the last piece of paper. And after you watch the jam, it means we're gonna get the question mark, or not the question mark, the jam mark. Like yours, or
I don't know. I put it in two actually.
Oh, okay.
Because it wasn't working, so. This one from the computer.
That's sure we should give her she's up here. Remember, it's that old program, I know.
Can we do recycling soda?
Sure, there's a basket back there if you want to. All right, now let's go to the ledger. If you have finished posting everything, and I want you to tell me which accounts still have a balance. Let's start with cash. Does it still have a balance?
Yes.
All right, accounts receivable, does it have a balance?
Yes.
What's the next account that has a balance? Prepaid rent. The next one. Office supplies. The next one. Office equipment. The next one. Accumulate depreciation, office equipment. The next account that has a balance. Accounts payable. What's the next one?